do you think that we see a new all-time high in 2026?
I'm open-minded to it. We have all of the data that would be supportive of that. Many people don't realize, but global money supply has gone up $11 trillion last year. The last time that happened was mid-2020, and gold added 12 trillion last year. Bitcoin should be able to do that and exceed gold in the next 10, 20 years, but that will only happen if all the comparable risks are eliminated. And right now that risk is quantum. Classic encryption can be broken by quantum in minutes as opposed to millions of years with current computers. Within 2 to 3 years, there's a non-zero probability that quantum computers will be powerful enough to break classic encryption. I think the biggest risk is just apathy, and that people move too slow and dismiss the quantum risk, because you do have some people say it's 20 years away, which is totally against all the data of the industry.
Bitcoiners might not like to hear this, but you are laying out ways to hedge against this risk. Tell us, what are you doing to protect your wealth? Hello, everyone, and welcome back to the Bitcoin News channel. I'm your host, Wallace, and today I'm very grateful to be joined by Charles Edwards, founder of Capriole Investments, a macro researcher, and creator of some of the most well-known on-chain Bitcoin metrics like hash ribbons and Bitcoin production cost. Charles, how are we doing today?
Doing very well. How are you going, Rob?
Doing well, yes. I mean, can't complain. Bitcoin just crossed some major lines on the chart. We've been frozen for about 2 months now, but we are back, it seems. So we just had the pleasure of reading your brand new outlook for 2026 in your latest newsletter, where you drew a major line in the sand at 93,500. This week's price action has been quite promising. We have passed that. So where are we?
Yeah, definitely. So in the newsletter, I noted that 93,500 was a key level in the weekly. Also, corresponds pretty close on the monthly as well to key technical levels. So if you're only looking at price alone, then 93,500 was a pretty key level for me to see crossover. Another reason is that we've spent now 7 or 8 weeks below that, which when you have price spend time below a level and then break through, that can be a really strong signal as well. It's called a false breakout, a fake out to the downside. So whenever we get those, and they happen quite a lot with Bitcoin, you tend to see a lot of price movement to the positive. So for me, I marked on that chart 108,000, for example, would be probably the next point that we would travel to. And that again assumes that we close also this week, which is only a few more days above that. So it seems pretty promising to me that it's a good, at least technical start to the year. If you can see, this is the chart we're talking about that I had in the newsletter, and the next key level, obviously above the 93, would be the 108. Today we're around, as of recording, 97.5.
Yeah, so I mean, we ended 2025 on quite a sour note. What was your outlook through the year? I know you've got the quantum thesis, and we will get into that at the later half. But in terms of the charts and metrics, did you feel like we were going to go lower from here, or were we building a solid base in the 80s and low 90s?
To be honest, below 93, I was pretty much open-minded to both outcomes. I'd say there's a few headwinds that Bitcoin has, and we could talk about that later, especially in the quantum side, but a lot of that risk is already priced in. So you can measure the fair value of Bitcoin many ways. I like energy value, puts Bitcoin around 148K today. So by that, we're very undervalued. But if you allow for some risk factors like quantum, I think you should probably clip 20% off that at least. And that, still means we're undervalued. So still an opportunity there. So this is the energy value metric I was just talking about, 148-ish K on our website. So we've spent quite a bit of time in that deep undervalued zone, below 40% discount. And whenever that happens, you can just very quickly visualize we've had really deep opportunities in the past. So that's a great signal. That said, periods of undervaluation can last for a long time in any asset, but also Bitcoin. It could go for years. So you need to be a bit careful with just buying undervalued, because you can end up in a value trap or underperforming versus other metrics or assets. So deep value is good, but you also want to see some confirmation from a technical point of view. You also want to see some combination with also like investor flows and that sort of behavior. So That's why this technical breakout this week, if confirmed, is a really promising start to that, because now you have value plus technicals in alignment. And for me, that's a pretty strong signal and something to kind of reassess the market with in an optimistic light.
And one of the big narratives of 2025 was, of course, the whales dumping, right? Millions of coins moved hands, and it was some of the longest holders in the market. I'm sure you talked to plenty of these whales and institutional investors. What is the whales outlook on 2026 and Bitcoin at the moment?
Yeah, look, I think it's pretty mixed. So if you talk to a lot of institutions, especially those who weren't in the crypto space before, so banks, funds, large family offices, $1 billion level plus sort of thing. They, especially in the last 2 years, before 2-3 years ago, they had zero interest. Now they have been spending that time doing the research. They're comfortable with the legal frameworks. They're comfortable that we have these institutional products, ETFs, and there is a lot of capital coming in through that into Bitcoin. So that's definitely positive. And then you hear a lot of those stories, princes and all sorts of different royal groups as well doing things in that space. But that's promising. But at the same time, you have to look at the raw aggregate data, which we do with long-term holder flows, what I call kind of OG whales, which is anyone who's held Bitcoin over 7+ years. That's been a really powerful metric as well to track. And there was a lot of net selling last year. So we can just quickly visualize that on screen. So OG whale dumping here, this is tracking the 7+ year holders of Bitcoin. And it's calculating the value that they're transacting as a percentage of market cap. So you can pretty quickly visualize from this red line. So we're talking today around numbers of around, it might sound small, 0.1% of total market cap, but that's a daily basis. And you can just compare it to price cycle tops. So we always get a lot of selling as price goes up in the past. Same in 2017, 2021. But we had just a considerable amount. You compare 2021 to today in the last year, where orders of magnitude higher in some cases. And we just generally spent the whole year, the whole 12 months at levels that 2021 was at for maybe 2 or 3 months. So a lot of selling, a lot of unloading. Some of that you can argue isn't selling. Some might be transferring to the ETF, but on net, it is selling. So that is like the counterforce, I suppose, we have to consider. So there's two cohorts I'm really interested in. One is these kind of long-term holders, and you can slice it a few ways. Hodler growth rate, you can just look at the people who've held Bitcoin for over 2 years or 1 year, for example. All of these lines here are those active percents of supply that haven't transacted in 2+ years or 1+ years. They all trended down in the last 12 months. There's all net selling there. That said, that, as we touched on, that is counteracted somewhat by institutions, which were buying on net a lot last year. So this chart down the bottom nets off total institutional buying, which is ETFs and treasury companies. When it's green, there's more buying than there is net supply coming to the market from mining. And we spent most of last year green, and all of the major price moves happened when that was net positive. So it went from 40 to 80K, etc. All these big moves were when institutions, ETFs, and treasury companies were buying. So when that goes red and there's net selling, there's a reason to be concerned. That happened at 110K recently in November. And that's when I got pretty conservative and risk off. It's kind of chopping around flat at the moment. So we've gone briefly positive and negative, but it is slightly positive right now. So that's also positive. That's also good for Bitcoin as a tail force, because for me, this institutional metric is probably more important than necessarily the long-term holders at this point. And the main driving force, I would say, a price action probably in the next few years. So as long as that's positive, I'm pretty happy in terms of the institutional flows that are happening for Bitcoin today.
And when we talk of institutional flows, we hear so much about Wall Street coming in, right? I mean, Bank of America telling clients 1% to 4%, BlackRock advises 2% to 3%, Fidelity 2% to 5%. So do you think that we are going to see the boomers who have $70 trillion worth of wealth really move into the market over the next 5 years?
Yeah, I mean, I think so. I think many already have. That thesis has just proved itself time and time again. Even if you're bearish on Bitcoin, if you think there's too many risks like quantum and that sort of thing, or whatever, what have you, that you just don't somehow believe in it, you'd be crazy not to have some small percentage allocation, in my opinion, over the long term, just because it's continuously outperformed all major asset classes since its inception. It's still, improved Sharpe ratios, risk-adjusted returns on portfolios over pretty much every 4-year rolling period since its inception as well. So it doesn't really matter if you're in real estate or if you're in equities or what have you. It just has always added value to have some exposure to it. So all the data supports that, and now with all the institutional rigor and frameworks, and a government system that's very pro-crypto as well, I think, you're definitely going to see more and more of that into the future. And there is a bit of a changing of the guard that we've seen in the last 12 months. There's been barely any retail action in Bitcoin and crypto, I would say, relatively to price cycles. And it has been, all these price actions we've looked at has been driven by institutions. So Bitcoin's kind of growing up, and I think you will see less of that kind of retail FOMO behavior with Bitcoin and more of the let's allocate some percentages. And if those percentages are small relatively to total dollars floating around the system, it's a lot of money. So I think that's the new phase, that's the new journey we're on, and that's where we have to go if we want this asset class to go to multi-trillions and can be the digital gold that we kind of all hope it will be one day.
Absolutely. And so when you analyze Bitcoin and the markets, you are using a lot of proprietary metrics, right? You are able to go on chain and look at the data straight up. And so I'd love to get into your journey. How did you start getting into Bitcoin and creating these metrics that many people follow today?
Yeah, so I've always loved investing and taking a data-driven approach to try and identify what is the fair value of something, why is it worth this, should it be more or less, that kind of infinite chase of trying to come up with intrinsic value, which is a moving target for any asset. And I was doing a lot of that systematically with equities, and I'd been investing for many, many years. And then 2017, Bitcoin hit the headlines, and I noticed it. And obviously at first, like everyone, probably brushed it off somewhat. But then the more I read and deep dived it, I quickly realized, wait a minute, this is like a game-changing asset. This is the elephant in the room. This is the asset that's going to outperform everything over the next 10 years. And I basically went all in terms of research, understanding, and my time spent on Bitcoin and building models for it from that point on, 2017. And even as the market came back a lot, 2018, and I lost a little bit of money because I was new in the space. I just kept investing my time in trying to value it and understand it and build models around it, because I was just convinced at that point that this was going to go to trillions, basically. So I did that and kept kind of delaying myself from jumping in full time, and then finally did it in 2019, just pulled the trigger and jumped in full time with the goal of effectively setting up a fund and managing assets systematically. And the first priority of that was obviously Bitcoin digital assets, because as I said, that was for me the biggest opportunity at the time. I still think there's great opportunity in that space, but we've obviously broadened out from there as well into other asset classes since.
So looking forward into 2026, you outline many of the tailwinds that are behind Bitcoin that should be pushing it to new all-time highs, correct? Federal Reserve is cutting rates. Jerome Powell is going to be replaced. Inflation seems to be somewhat under control. And we've got a midterms that Trump is set to win, and he's probably going to print a lot of money to do that. So all these factors are pushing behind Bitcoin. Do you think that we see a new all-time high in 2026?
Yeah, great question. I'm open-minded to it, yeah. I think a few things need to happen, as I talk about in that newsletter, but we have all of the tail forces and all of the data that would be supportive of that. Maybe pull up a couple macro charts just to illustrate. But if you look at liquidity, so for me, this is the most important top-down metrics, plural, for first assessing what is likely to happen with risk markets. So this is US liquidity. This is kind of like the starting point because this aggregates the Fed balance sheet growth. Then it takes out the RRP market and the US Treasury General Account. So basically, it's the first point of capital coming to the market. And if you simplify it, just think about the Fed balance sheet. If that goes up, they're basically giving money to banks by buying bonds and what have you, and then they have to deploy that cash. So that cash typically then gets deployed across obviously many things, but ultimately it flows down and into equities, gold, commodities, etc. So we had with the US shutdown, which started around here. Obviously, we had a lot of liquidity coming out of the market, but then as soon as the shutdown ended, I think it was the 12th of November in this region here, we've seen a lot re-enter, which is pretty typical. And I was writing about in prior newsletters that is kind of what I thought would happen. So that's positive, and it does look like we have a bit of a bottoming formation in that out of this kind of post-corona tightening phase, and the Fed is now buying $40 billion a month, which hasn't happened in years and is really positive. So that's the first point. So that's positive. The even bigger factor here is actually global money supply, which many people don't realize, but has gone up $11 trillion last year, which is pretty crazy. So we're at 115 trillion 12 months ago in January 2025. Where is it? Yeah, we were down at 104 trillion. So that is a huge amount of growth. You can look at that year on year to get a more clear view of that. And yeah, it's up 10% year on year. The last time that happened was mid 2020, when we had the stimmy checks coming out and the world was shut down and they were pumping money into the markets to get it moving when everyone was not leaving their home from Corona. So we have the exact same amount of money flows as the middle of that chaos today, and that doesn't happen very often. And every time it does, we pretty much always see asset prices go much higher, and you can look at it multiple points in time through history. So that's probably the starting point for me, is the liquidity coming into the market. And then what important to consider is forward looking. So what is Trump saying? What's the Fed saying? And it's all supportive of that. So the Fed broadly is planning to cut rates. There's a new Fed chair expected to come in, and they're likely supporting Trump's plan as well of even lower, more aggressively lower rates. We have unemployment starting to tick up, and if that gets out of control in any fashion or format, the Fed will also have to step in with more QE. Trump's cutting the credit card cap was going to try to cut the interest rates to 10%, which is less than half what they are today. So all of this adds fuel and liquidity to markets, and people need to find out where to put it. So if you think about that context of just 11 trillion added in the last year, it's not surprising that gold also went up 10 to 12 trillion last year, about the same. It's unfortunate Bitcoin didn't really capture any of that, but I think there will be some rebalancing, mean reversion between all these asset classes that will allow Bitcoin to capture some of it into the future. And our chance of that happening will be tenfold if we can develop a roadmap and a pathway to improving the code to make it quantum proof. I think that's pretty much the biggest drag right now. But even with that in the air, it's already priced in, as I mentioned. So there's definitely space for us to progress up from here, over 100K. I'm open-minded to a new all-time high. I'm open-minded to a few outcomes. I think they will skew more and more positively the more and more we progress on a quantum proofing roadmap for Bitcoin.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video. Speaking of gold, it's been quite the year and I think it took many investors by surprise. Were you surprised by this move up to 4,600 today? And do you think it still has time to run?
Yeah, I mean, coming into 2025, I didn't expect gold to go up 60-something%. I don't think anyone could honestly say that, given it was already a $20+ trillion asset. That's pretty phenomenal. In hindsight, given now that we know what the global money supply grew by, and a few other factors, I think, it one for one more or less makes sense. Gold tends to spend many years, decades, sometimes flat, doing not much, going sideways, but then it has years where it makes all of its gains. So you can also just take a very simple ratio of gold to equities. And most of the time, or at least 60% of the time through history, you'll find equities outperform, and you don't want to be allocated to gold because you get higher average annual returns. However, when gold breaks above equities on that ratio, on, for example, a 200-week moving average, it can stay in that relative outperformance to equities for usually somewhere between 4 and 10 years. And in those periods, sometimes equities go sideways, sometimes they do go up as well, but you get massive outperformance just by holding gold. So that's something I think people are probably missing, because we entered that phase about 18 months ago. I spoke about it about a year ago. And we're about 18 months in now, but it could last another 3 to 8 years, which is what has happened in the early 2000s, in the 70s, also, around the World War II era. So these, and when that happens, you get multiple expansion of gold to equities it can be 2 to 5 times. So it could go up orders of magnitude from here than what people are expecting. We already have relatively high equity valuations across a number of metrics. If unemployment would tick up, if there was some kind of recession, or many other factors, that would also play into gold's hand, I think, over the next few years. So none of these trends have to last, and they can change month to month, of course, but historically and statistically, they tend to stick. And while they do, in my opinion, you do want to have some allocation to those assets.
Absolutely. And so as an American and watching our politics on a daily basis, it's like a reality show. But on this last weekend, we had Jerome Powell release what looked like a hostage video late at night saying, I'm facing criminal charges from President Trump, who wants me to lower rates, and he's putting pressure on me from the DOJ because of it. So as somebody outside of America, what does this look like to you? And was it funny to you, the lack of reaction in markets the day after this news broke?
Look, I don't know if I'm probably the best sample of a non-American, because given the nature of what I do, probably most of the news I watch is American. So it's nothing too surprising to me, I suppose, given we know Trump and his kind of exotic and bold moves. And a lot of it, I think can come down, a lot of the things Trump does sometimes are just posturing and negotiation tactics. So it's hard to know. Often it's hard to know if he's going to go all in on something, or if it's just that. The tariffs is a good example where he pumped them up to over 100% or something back in April last year, and then within 1 to 2 months, 70-80% of that was wound back because it was just impacting markets too much. So there's always that dynamic factor you have to consider. Yeah, it's kind of surprising, I think, because we know a new Fed chair is coming in, but I think maybe by doing this, it's trying to display some more control over the Fed for the next chair that's coming in as well. But either way, however you interpret it, it's a bit of speculation. But the message I think is clear, is that he definitely wants much lower rates. He's said that. he wants to drive the growth engine. We know midterms coming up in the US, midterm elections in the next 3 to 9 months period. So he needs to really see strong economic performance through that time, because the economy and inflation are ranked, I think, the two highest metrics for US voters, above all other factors of life. Obviously, everyone wants to have a living and make money, and that's the driving factor. So I think Trump really wants to see strong economic outcomes, especially in the next 3 to 6 months, and that is one of the levers to pull. And whether or not that works, there'll be others, like the credit card limit cap we talked about, like eliminating tax on small Bitcoin transactions as well. So a few other things like that. There'll probably be more, I think, the next 3 to 6 months. And that's just positive, I think, for risk assets in this environment and Bitcoin as well.
And to round out this political section, so many of these initiatives that he wants to do are to run the economy hot, right? Lower interest rates and get asset prices up. But at the same time, we're dealing with an affordability crisis in America. Home prices are too high for the young people to get involved and get started on a starter home. So do you see these two forces as combating each other, or are they just in one general move of trying to make everything explode higher?
You mean, it's in terms of housing affordability? Yeah. Yeah, in short, yes. Like housing, equities, commodities, and Bitcoin, those kind of fall, all those buckets of assets. If you increase the money supply, then those assets all get repriced up generally. They obviously won't be equal. Some are more liquid than others, and they obviously tend to go up more quickly. So you probably see flows into equities and gold and Bitcoin before you'll see the same amount of impact in housing. But there are, I guess, other levers you can pull on the housing market. You can increase the supply. You can control population growth rate via immigration, right? So if there's less immigration under Trump, then there'll be less, organic demand for housing. So there's a few factors there that may mean that housing may not necessarily need to go up in the same orders of magnitude. So yeah, it can go a few ways. It's definitely a bigger long-term play. And it's not, I guess none of this stuff is easy to control really. Yeah.
None of it's easy to control, and neither is Bitcoin. And so now I would like to transition into the section on quantum. You have gone on tour for the last couple of months, really raising the flag about how quantum is a real threat to Bitcoin. And it's very easy for us on X to say, no, this is FUD. This is years out, decades out, nothing to worry about. But after researching what you've had to say, it's become clear to me that no, we really should look into this. And just seeing how AI has grown so quickly over the last 3 years, we're seeing technology just take this exponential leap forward. So quantum is on the table. And before we talk about the threat, I think you give one of the best brief explanations of what quantum computing actually is. So could you please share that with the audience?
Thanks, it's very kind. I'm not sure I would agree, but so quantum computing it's a game changer in how we process things at the technological processor level. So traditional computers work with ones and zeros at the end of the day. All these chips, and regardless of how advanced they've become, they're basically choosing values of between 1 and 0, and they're trying to do it as fast as possible. So everything can be broken down into that. Words, maths, obviously, everything can be broken down into ones and zeros, and that's how they calculate answers and display everything that you see. Quantum computers do it differently because they work at the atomic level. There's many different ways that it can be done, and we still don't know which of those is going to be the most scalable. But essentially, they simulate 1, 0, and both at the same time. So they can have multiple states at the same time. And that becomes really interesting and exciting when you're trying to solve very complex equations and problems, and when you're trying to optimize any kind of function. Because typically when you're optimizing something or fitting data to something, you're doing hundreds and thousands of computations to guess value, to calculate values and get closer to a solution. But if you can simulate all those values at once, or very close to it once with quantum, you can do that in infinitely faster amount of time. So that means that problems that were just unsolvable in our lifetimes are now solvable. Cryptography and everything that's used to secure encryption. So your passwords and all your applications, banking, crypto, everything like that. Though that classic encryption can be broken by quantum or solved, so to speak, in minutes as opposed to millions of years with current computers. So that is a risk factor for things like Bitcoin and crypto. But in these kind of Bitcoin atmosphere, we tend to focus on those negatives, but it is actually really exciting for all quantum computing in general is really exciting for all industries because it's going to unlock so many innovations that we couldn't even imagine today. And in solving problems across medical science, drug discovery, all sorts of things. And it's already been used in trial levels in those industries and proving significant performance boosts on traditional computing. So it's a really exciting industry in general, which I think is just going to go through its kind of hockey stick acceleration adoption curve, if you will, over the next 5 to 10 years.
And what got you interested in quantum? What made you realize that, wow, we are at a different phase than we've ever been at before?
Yeah, so I suppose that I first kind of discovered or learned about quantum, behavior and physics at university. And I was really fascinated by that, and it kind of just really stuck with me. I try to be a logical kind of person, and even Einstein really struggled with it because he wanted to create a formula that basically solved gravity and everything in one. But when he got to the quantum level, nothing made sense because it was all probabilities, and you couldn't necessarily predict things in the way that he would, and that he struggled with that. And so I don't know. I just always was interested in that whole field from a young age, and have subsequently kind of tracked it. And then, I have looked at quantum computing for many years at a high level, and especially related to Bitcoin, it just seemed like it was 10 plus years away and not really a worry for a long time. That really changed in the last 2 to 3 years. And it basically flipped in 2025. So we started, for example, investing in it in the fund as a hedge, but also a value opportunity 2 years ago in the Capriole fund. But 2025 was really the key year for quantum as a threat to Bitcoin, because within 2 to 3 years, there's a non-zero probability that quantum computers will be powerful enough to break classic encryption. It's not a high probability, but it's about 20 to 30% by 2028, before the next US election, that a quantum machine will be able to break Bitcoin's elliptic curve cryptography. So what that means is, by definition, it probably won't happen, but there is a chance. And that time frame of 2 to 3 years is about the same time frame it'll take to fully deploy, peer-reviewed, accepted code to upgrade Bitcoin to be quantum proof and roll it out across all the users. It could be slightly less than that. It could end up being 2 years if we're super efficient and aggressive, but probably 2 to 3 is a fairly base time frame for that. So what that means is we've now entered the window of quantum threat that is exactly equal to or less than the time to upgrade Bitcoin itself. So now we basically have to discount the value of Bitcoin, in my mind, by the same probability as that a quantum machine will break Bitcoin in the next 2 to 3 years. And as I said, that's circa 20 to 30%. It won't eliminate value altogether. Bitcoin will get upgraded at some point. It will navigate through this. So if your horizon's 20 years, you probably don't care about this at all. But it does mean there's turbulence unless we solve on this, significant in my opinion. And in the near term, that risk has to be accounted for as an investor until there's a very clear pathway roadmap to upgrading the code, which I'm hopeful we'll make significant progress on this year. And if we do, whenever that progress is a consensus is broadly targeted to a specific signature solution, a specific way to upgrade Bitcoin, a lot of that risk just falls away because we've already done the hard work. So until then, there is some substantial risk, and that's why I've been talking about it a lot, because I just want to see this network survive and thrive the next 10 years and more. But the next 10 years is going to be pretty critical, I think, to solve on. And I'm hopeful that we'll progress that significantly in the next sort of 12 to 18 months.
And as you've been on this campaign, you've obviously ruffled a lot of feathers, and I'm sure you've gotten a fair amount of messages on X that are not the kindest. So I salute you for the job of doing the hard work there. But have you talked to any core devs or people who are working on Bitcoin code, and what has been their reaction?
Yeah, I mean, anyone who is across this risk and working the code it's super obvious to them that this needs to be done urgently. It's really the people who don't understand quantum or just want to see Bitcoin go up only, and it's the only thing they believe in. They're the only ones who are really against it, or their incentive structure is such that they own a massive Bitcoin company, so they don't want to talk about it publicly. If you filter out those groups, it's very on top of mind. So the main, I suppose, developers on that front I've been talking to would be on the BIP360 protocol. That's the main sort of upgrade proposal for Bitcoin at this point. At least it's a starting point to make it quantum proof. The trouble is that there are some challenges. They're all solvable, but the question mark is what signature method do we replace on Bitcoin to make it quantum proof? And there's a few options. The ones that had been floated around last year are relatively large. They can be up to 10 to 100 times larger. This is in file size than what Bitcoin currently has. This is getting technical, but basically it means if they're very big, you can have less transactions on any individual Bitcoin block, which means the transactions throughput of Bitcoin would slow down a lot. That can be a problem. So now the question is, do we identify a lighter weight, more efficient signature quantum proof method instead, which doesn't hinder on that. So that's probably where we'll move towards hopefully this year. But there are, they're the kind of technical challenges that are being discussed at the moment to basically finalize the code. So we're still, in the depths of that, working the code. And I think the biggest risk is just kind of apathy, and that people move too slow and dismiss the quantum risk, because you do have some people say it's 20 years away, which is crazy. It's just totally against all the data of the industry and where it's at and what anyone who's across quantum is saying. So, it's all solvable, essentially. It's just the challenge that Bitcoin broadly has is decentralized, and you have to get a lot of people on alignment. And so that's the biggest hurdle we have to get over. And, we've done it before, so I'm sure we'll do it again.
Yeah, and you often mention Q Day, right? That is the day that it becomes unlocked and that Bitcoin becomes vulnerable. Can you tell us which signatures or addresses are most vulnerable, and what would that transition to quantum resistant addresses look like in terms of time?
Yeah, so Bitcoin has 4 or 5 different signature methods through its lifetime. It started off P2PK, which is basically exposing the public key on completion of a block. So all of the early Bitcoin, like Satoshi's wallet, which has about 125 billion in it, has a public key exposed on the blockchain. There's many other such examples. There's also wallets that are already just public because they're large and reused. You can look at the highest value. There's a website for the highest value of Bitcoin wallets through time, and they're all ranked. So there's a lot of money publicly exposed, and it's estimated around 20 to 30% of all Bitcoin. And the problem with those public keys being exposed, so for those who don't know, every Bitcoin wallet is basically just 2 things. It's a public key and a private key. The public key is like your address, like your home address, for example, and the private key is like your key to the door to access it and move funds. The problem with the quantum machine is that it can calculate or back calculate the private key from the public key once you have a sufficiently powerful machine, which is estimated to be about 2,300 qubits to break Bitcoin's cryptography. And the top 5 or 6 firms in the world in quantum are all projecting that within 5 years. So that means that good probability that will happen in sort of 5-6 years time. Some probability in 2 to 3 years time that these machines will be able to calculate the private key from the public key. So that 20 or 30% of Bitcoin will be, unless it moves into a new signature method or wallet, it will be taken by a quantum machine if your time frame is sort of 5 to 10 years. So pretty much with certainty. There's nothing we can do to stop that. The only thing we could possibly do, which is a heavy debate topic at the moment, is do we just let it happen and accept that some lucky hacker will capture 20 or 30% of a couple $1 trillion? Or do we, in our BIP or future BIP to upgrade Bitcoin, do we say that if you don't move to a quantum proof signature method by some time frame, 2 years, 3 years, whatever it may be, then those coins will be defunct or unusable, which would basically be burning those coins if they're not moved. There's obviously philosophical debates around that, which need to be had. It's not an easy thing to answer, but there's options to solve on that, I suppose. But it is probably the biggest risk in terms of potential supply entering the market over the next 5 to 6 years. There's a good chance that a lot of it will enter supply again. So if you see Satoshi's coins moving at any point next 5 years, it doesn't mean he's alive. It probably means that a hacker has acquired them.
But from a game theory perspective, it's only the largest players that have access to this kind of computing, right? I mean, nation states, America, China, Google, IBM. There's only a handful of actors that could actually make a move like this, right? Yeah,
so this is a good point. So just summarizing the quantum industry today, there's about 50 to 60 quantum companies in the world. Some of them are hybrids like Google, Amazon, that are doing multiple businesses and have a quantum department. There's about 12 or 13 publicly listed quantum companies globally. About 40, 50% of them are in the US. So there are others in the EU, Japan, and China. And there's probably about double that, again, private. And there's probably, of the total universe of, say, 50 to 60, there's about 5 to 10 that are probably very clear leaders in the space. But at the same time, we don't really know the capability that China has, and they are investing double the US in quantum. So, yeah, they're not going to necessarily display what capability they have there. So there's a few elements to consider. Is that, in 2-3 years, the leaders in quantum could be quite different to today. They could be more advanced, less advanced than today. There's some uncertainty there. But there'll probably be, call it 3 to 6 companies that will hit this capability in the next 5 to 6 years. The other factor is that pretty much all the US companies are they're hosting their quantum machines on the cloud. So you can use a quantum machine today on Amazon AWS, Google, Microsoft, Azure, etc. So at some point, the machines will be powerful enough and you can hire that capability, and anyone in the world could do that and use it for what they want, and no one would really know what using it for. So the probability that capability is on the cloud and available for any individual person is probably quite a way away. It might be 10 years, right? Because that's the leading tier, compute capability. But there's also the element of, while it may be considered a crime in the US, Bitcoin and crypto is broadly illegal in China, and I'm sure there'd be players there that would be very happy to see it collapse. It's kind of a game theory thing at some point. Even I guess what I'm saying is once the capability is technically there, it doesn't mean that it'll be used for that because it's kind of a crime. But at some point in time, it will be used for that. You just have to project it across all those scenarios I just talked about. It will be used for that at some point. So even once the capability is there, even if it's not used, that would be enough to incite pretty much panic, I think, across crypto in general. So that's why it's just really important that we solve it early, because we just can't afford to be late because of the trust that would be eroded in that environment. Bitcoin has taken 16, 17 years to get where it is today, a couple of trillion. It's basically just built up trust really slowly. We've had 1 million calls for the death of Bitcoin, that it's worth nothing, and it's just continued to prove that it's not. So I just think an event like this would be really catastrophic for trust for Bitcoin, which is hard to gain and easily lost. So that's why I talk about it, because I'm hopeful we can accelerate the timelines a bit to upgrade it so that we don't have to worry about these things.
And you mentioned before, there is a great philosophical debate, especially about Satoshi's coins, right? He's got 1.1 million of them. They've been sitting there since the beginning of Bitcoin, and say he is no longer with us and not able to move them. The two options are either let them be quantum attacked or to burn them. You say that you are leaning towards burning the keys, right? Whereas I personally, I finally realized, okay, quantum might be a thing, but if it is, I personally believe maybe we should just let the keys be open to those Satoshi keys be open to attack, and Bitcoin should be able to withstand a 5% dump of all the coins.
Yeah, look, I can go both ways in this. I don't think there's a right or wrong answer here because this is a really tough one. I think you have to first think about what are the core tenets and value props of Bitcoin. One is not your keys, not your coins. So that would argue we shouldn't do anything. We should let whoever has control of that wallet control it, whether it be a hacker or not. That would be, if you want to support that tenet, then you're right. But there's also other tenets and value props like hard money and, the supply doesn't change. It's 21 million coins. It's, locked in. This is the number one asset for protecting capital against fiat monetary expansion, all that sort of stuff, right? That tenet, I think, would be pretty threatened if suddenly 20 or 30% of coins hit the market because of hacking. And people say, oh, well, it's still only 21 million. Fine, that's true. And, it ultimately would blow through it over time. But who's going to really believe or care about that it's hard money with 21 million coins if a hacker has, 2 million coins overnight? I think that alone would cause trust concerns, and it's not like an insurmountable hurdle. We can work through it, but it's going to set us back probably 5-10 years of what Bitcoin has achieved. So that's where you can kind of come to a few points. So the one option is do nothing. The opposite extreme is, say you got 2 years to migrate or they're basically burnt. I think the hard money supply argument for Bitcoin is the most valuable value prop. I think that I lean more towards that, but it's not clear cut either because, what if you're in prison and you're innocent and you can't access your coins and all your money is suddenly gone. So there are scenarios where that's maybe not fair. Maybe, there's ways that in the middle of those two hardcore scenarios that it could be managed. So I guess I just encourage the debate to happen. And there is no real right or wrong answer, to be honest, because if you choose one or the other, you're kind of opting for one value prop of Bitcoin over the other. And, Bitcoin is decentralized. It is what we all collectively think it is. So I just support the conversation so that at least there's a communicated and clear roadmap and consensus of where we're going to the broader investment community. Because if we go into it with no idea, or if we go into it thinking, we've got no plan, quantum's 10 years away, who cares? And then suddenly the supply hits the market, that would be the worst case scenario. Whereas if we go into it saying, okay, the community as a whole has accepted this is what we're going to do, we're going to do nothing, it will happen at some point, fine, at least there's that certainty into the future horizon, which would, uncertainty is the biggest challenge in financial markets, and it results in volatility and devaluing. Whereas if you've got certainty, you never have full certainty, but some level of certainty in sort of a pathway, that already eliminates a lot of risk factors for investors as a whole.
And that's why I salute you. It's not too early to start talking about this. This is the perfect time. And some people are saying that we only have until the next election to get this done. So time is of the essence. Yeah. And oh, please.
Oh, no, I was just going to say Vitalik Buterin, founded Ethereum, is one of those people who thinks we got till the next election. US Department of War also saying it's a real threat in 3 years. So, time's important.
And as an investor, Bitcoiners, some of them might not like to hear this, but you are laying out ways to hedge against this risk. Tell us, what are you doing to protect your wealth?
Yeah, so the first thing I decided is to go basically, there's two things. I decided I can't be 100% crypto Bitcoin anymore because the risk is now too high. And so, which is funny because if you ask the general public, they'd say the risk in crypto is lowest today than ever before because of all this legal or regulatory framework we have. But for me, it's opposite. It was the lowest risk 5-10 years ago when the value opportunity was really great and we didn't have these existential risks on the horizon. So the first thing is I can't be 100% in it. And I want to have at least some percentage exposure to quantum computing assets as a hedge against the quantum computing risk. And so we've done a lot of work on that. We have an index. We've calculated what an optimal basket that would be and benchmarked that globally and found it to be the best quantum computing index in the world. So that's one thing I kind of have some allocation to. The other thing is obviously just talking about this. I occasionally poked my head up on the quantum topic over the last few years, 3, 4, 5 years, but decided it wasn't really that tangible a threat at the time. And then really late 2024 is when I really started saying, okay, we'd run out of time now. And if we want to get on the front foot of this and implement something before it's a real risk, we need to talk about it. So that's why my second thing is just to talk about it, to share it and encourage progress towards a solution. And the roadmap to a solution really is just basically getting the Bitcoin core development team to get alignment on the code to upgrade it. That's the first step. Once that is done, obviously there's other things we need to do, the nodes, for example. But really right now that we're at the point where we just need to be basically hassling the Bitcoin core developers to to write the code and test it thoroughly. And have that as proposal to review. So that's basically the number one objective I'd love to see traction on in the first 6 months of 2026. So hopefully by mid-year, we've got really solid code framework that, a number of, not just 2 or 3, but multiple Bitcoin core devs are behind. That would be an amazing outcome. And that in itself would probably deduct a good chunk of the risk we have on this whole topic.
And how do we do that as a community? How do we get the attention of the core devs and throw our support behind BIP 360?
That's the challenge of a decentralized network. We don't probably have the best infrastructure to centralize that debate and progress. I think the starting point is just to identify the key people on Twitter probably and on Bitcoin forums and push them and encourage them and share evidence of if they don't believe in it, because some probably think it's far off. I know a lot don't, but there's mixed views. So sharing of evidence helps, giving feedback on code, or maybe you identify a bug in the code, or maybe you find a better signature method or what have you. Some consideration, just providing that feedback energy is definitely going to be super valuable. And that's basically the number one priority, I would say, the next 6 months.
And Charles, to me, it's very clear you're someone who cares deeply about Bitcoin and you want to see this network succeed. So if we're able to overcome this in the next decade and survive the quantum threat, what is your long-term vision for Bitcoin and what is its place in the global financial system?
Yeah, sure. So I think my base case is we'll definitely survive it. It's just how big of a bear market do we want to go through, right? Like, so even if quantum threat becomes real before the code's upgraded, which I'm hopeful is going to be a low probability, but if that does happen, we can still upgrade the code. There's still actions that we can take. And so at the end of the day, Bitcoin will still be around in some format. It's just, do we want it to be high levels of trust, adoption, and to maintain a ton of economic value? And that's basically, why I want to try and help that pathway to the best outcome. But we will get through it. So what, what's the end outcome is your question. I think, if we can solve on quantum, then that puts us back on a level playing field, I would say, with gold, in terms of Bitcoin being a better version of gold, decentralized, lightweight, all the obvious pros we know, instantaneous 24/7 transactions, no custody costs, all that sort of stuff. So Bitcoin should be a better gold. And gold added 12 trillion last year, 7 crypto market caps in 1 year. So Bitcoin should be able to do that and exceed gold in the next 10, 20 years. But that will only happen if all the comparable risks are eliminated. And right now, that risk that is holding us back is quantum. I also, in a recent conference pinned on my Twitter at the moment, but went through why Bitcoin underperformed last year when we had all the perfect backdrop for crypto and Bitcoin with all the money supply growth, with the being the peak bull market year where we typically see some of the most gains in Bitcoin, etc., with gold going up, 11, 12 trillion in 1 year. There's really no excuse. And for me, this is the primary factor because the risk is now being discounted by people. So once we solve on that, then I think we can definitely march towards 30 trillion plus in the long term, potentially a lot more. But the key factor for survival is adaptability, Darwinism, right? And so long term, and this is the same with any computing code, there's no code that lasts forever because the world is advancing. And so Bitcoin has to be updated from time to time to make it more robust. And it's just important, obviously, we maintain the key core principles of Bitcoin, like 21 million coins and all the other factors that are important to the meaning of Bitcoin. But otherwise, the code needs to be improved. And quantum's the main threat now, but I'm sure in 20, 30 years, it'll be something else. And we need to be adaptable in order to progress it and survive and present equally and better to other assets out there. And so this is an important step we need to take. And otherwise, I think, we can continue to march on as the best store of value in the world.
Well, I want to thank you for being a messenger about this because this is one of the few existential threats to Bitcoin. We don't know when it's going to happen, but it's becoming more and more of a realistic probability. So it's important we're having these conversations and that you yourself were willing to take some bullets, like that meme, the guy who's standing in front of the guy in front of the bed, right?
Yeah.
So thank you for that. But so this next year ahead, you're going to be on the road, multiple conferences. If people want to see you live or find out more about what you're doing, where should they go?
Yeah, thanks. I'll be speaking at Consensus in Hong Kong in February, and then heading to Las Vegas, Bitcoin 2026 in April, and Consensus Miami in May. Probably be stopping by New York in the middle there as well, and possibly some other trips to Finland, BTC Hell end of the year, and etc. So I'll be traveling around, so happy to catch up with anyone in the area.
Wonderful. Well, if you stop by New York City, you got to come to PubKey and check out the Mecca that it is.
Yeah, that's a good.
All right,
Charles. I'll have to add that to the itinerary.
Definitely. All right. Thank you so much for your time, and we'll be on the lookout. So 2026 is the year we got to get quantum not solved, but talked about. So that's what we're doing here today.
Yeah, exactly.
Thank you, Charles.
My pleasure. Thanks, Rob.
Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.